What does it mean to be dependable? It means you do what you say you'll do time and time again. That's why the cattlemen of this great nation trust Ritchie to provide fresh water on demand. Ritchie, proud to be a partner to the American cattlemen since 1921.
Hello, I'm Marcus Brix with the CattleFax Closing Bell, brought to you by Ritchie Watering Systems. For the week ending January 13th, the USDA reported boxed beef cutouts marked some significant one-week declines. On choice beef, the cutout was lower by $12.42 per hundredweight. For select beef, the cutout was lower by $6.84. The result was a boxed beef composite cutout, which is a production-weighted average of the two cutouts, turning lower by $8.93 per hundredweight. Pressured by large supplies of beef and competing proteins, and light demand typical of the season, this is the largest weekly drop to the composite cutout since September 2015. The wholesale beef market is currently being supported in the mid-180s to low 190s on a per hundredweight measure. These price levels defined most of the range from 2012 to 2013. The recent rally in fed cattle market with the pressure on the composite cutout has caused beef packing margins to dwindle within the last month. 5 weeks ago, weekly average beef packing returns showed a profit near $165 per head, compared to this week's projected average of $6.72 per head. Although astonishing, this is the closest the beef packing segment has come to a negative margin since the spring of 2016. Although net positive on an annual basis, the seasonal data shows the packer often has negative margins in the first and fourth quarters. In fourth quarter 2016, beef packing returns averaged $141 per head, mostly due to the strong leverage the packer was holding over the cattle feeder. In fact, the packer only saw 2 weeks of 2016 with negative returns, both occurring in the spring. The cattle feeder would prefer a large portion of packer profits get transferred to their own segment of the industry and has taken the recent rally to regain some leverage. For the first 2 weeks of 2017, the fed cattle price minus hide and offal as a percentage of the composite beef cutout has averaged 55.81%. This ratio is above the long-term average for the first time in over 6 months. The cattle feeder should still be cautious, however, as history suggests first quarter leverage is often very similar to leverage in the previous fourth quarter. Leverage in the fourth quarter 2016 was the lowest in history at 51.2%, but did perform better near year-end after the ratio rallied 4 percentage points off the lows. Thanks for watching. Remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.